As we head deeper into the fourth quarter of the year 2021, the question remains how to maximize gains between the two greatest and biggest cryptocurrencies of them all, Bitcoin and, of course, Ethereum. With that said, welcome back to EllioTrades channel. I'm your host, Krown, again today with some good old TA. I want to say first and foremost, thank you for all the feedback on these videos. I recognize now that my noise gate has been a little bit too aggressive, so I've turned it down for this video. In fact, I turned it all the way off. Let me know if that is a worthy change and we can adjust it from there. Should also let you know that I have my own channel. It is in the link in the description below, and you are more than welcome to hang out there. We do daily Bitcoin analysis and a little bit of altcoins here and there as well. Okay, sweet. All right, so let's get to the topic of today. So within the context of maximizing profits, we want to know if you are looking at the two biggest cryptocurrencies, that being Bitcoin and Ethereum, the two generally thought of as most tested and safest, blue chips, if you will, which one is likely to maximize gains as we head deeper into the fourth quarter? Well, we can look at a chart for that, of course, and that would be the Ethereum Bitcoin pairing right here. Now, before we get into the minutia of this, I want to preface this conversation by saying this is not a guide or financial advice in the sense of go all into the one that we are looking at as a little bit better. It is actually more wise, if you do ask my opinion, which this is not financial advice, I'm not a financial advisor, of course, that you probably split them up a bit. But depending upon the ratios here, it might be making more sense to you in your own personal investing or trading journey to look at one as a little bit more interesting, we'll say. Okay, so first and foremost, what do we notice right here? Well, remember the video that we uploaded about a week ago on how to judge which is going to be better versus essentially Bitcoin or just any old pair. Well, that was the old Krown cross right here, as I like to refer to it. And we have all lower periods trading above higher periods on the daily and especially on the weekly as well. On the weekly, especially since July 2020. But most importantly, and the thing that I'm going to talk about right now, what do we have? Well, we have trend. We have our rising lows, we have our rising bottoms, and we love our rising bottoms, as denoted by all of these red arrows right here. More specifically, ever since this consolidation phase began in May, and now we are currently in November, we have seen that it has essentially formed what would be identified as a bullish reaccumulation formation in the format of an ascending triangle. Again, don't let these words confuse or scare you. All that it essentially implies is that we have rising lows and the same highs. So that means that buyers are getting more aggressive, sellers are not getting more aggressive, and also pushing price down less and less with each and every successful test of the top end resistance. So essentially we have a range between about 7.75 million Satoshis and a rising support range of about 6.5 million Satoshis. Of course, when it comes to a trade setup or a trade idea, there is no complete trade setup or idea without, of course, having a validation condition and an invalidation condition. A validation condition essentially meaning that if this is present, something tangible, of course, then we validate the setup. And if it is not present, if it is invalidated, then the setup is negated and it is no longer active. Okay, so with that in mind, the top end validation condition would be above our top end resistance right here at about 7.75 million Satoshis. If that were to happen, there is a technical target for this, and it would be right around 0.0965 or 9.65 million Satoshis, and very likely does continue onwards and upwards from there after a bit of a short-term consolidation. Anyways, what would the invalidation condition be? Well, if you are looking at this as higher lows, where do you lose your higher lows? Below about 6.35 million Satoshis. And at that point, I'd be looking for price action to come way back down towards 5.5 million Satoshis, very likely bounce there, and then come much further down over time. Do I think that's what's happening? No, I don't. And short term, this is looking pretty damn good, dare I say, as long as we are above the 0.069 million Satoshi region, meaning that we can see price action come down there. That's completely fine. The second that we lose that, it will lose its more short-term good posturing, which is giving us a bit more of a immediate bullish bias. Now, when talking about targets, we don't really even look for this one to get hit as soon as it takes out the top end resistance. Probably still takes about a couple weeks from there, as we are, of course, naturally on a weekly. With that in mind, let's go to the weekly here and let's do a little bit of an analysis on the on our indicators, of which what's the most important one following trend? Volatility. And you can see right here that we are at the second lowest volatility read that we've ever seen in this asset. And we are actually consolidating alongside that for about the longest time that we've seen with a low volatility read. So let me rephrase that and essentially say that the longer that you consolidate, which is contracting volatility essentially, as the dispersion of returns gets lower and lower, of course, it is expected, and it is essentially a Wyckoff notion that the greater the result, aka the greater the breakout or breakdown, will be. And we have about a 6-month long consolidation here between May and November. And of course, the last few times that we've even seen a few month-long consolidation with low volatility reads have been met with some pretty impressive moves. We're talking even this one over here, which is not the most impressive, but from major low to next major high, about 130%. This one right here, again, not even consolidating for as long, but giving you about a 200% move, not bad. And then of course, this one over here on the first initial move, which, admittedly takes about a month and a half, 2 months. About 420% right there, not bad. Not only that, but as you'll notice with all of these vertical bars, well, actually not all of them for the first one because it's a little bit too new, but for the other ones, we do see that it is also accompanied by divergence signals. So we have bullish divergence right here, hidden bullish divergence right here, and then yet again, hidden bullish divergence right here. Pretty damn good. Okay, so let's just take an average of those percentage gains from the from those low volatility reads, which was about 200%. And again, keep in mind that this consolidation over here longer than the other ones, so theoretically should have more weight to it. And let's go and actually first, before we complete that point, we should look at weekly momentum on the weekly stochastic. This is also going to be accompanied by another volatility indicator. This is just a historical volatility percentile, very low, you might notice. And we are actually freshly crossing up. So momentum is to the upside, also rejecting getting out of the neutral zone right here, or rejecting the bearish control zone, as long as we are above 6.4 million Satoshis. Okay, so let's go complete that point now, as I kind of got a little bit sidetracked myself. So of course, this is what we're looking at right here. And that first measured move points you up just basically around what's called, 0.01 or 10 million Satoshis, I do believe. Anyways, are things likely to stop there? Well, in my opinion, no, because we're not hitting any major macro area at that point, no major fibs. And you'll notice that on this chart right here, we are rapidly approaching a macro area. So this would be considered a macro breakout. And so with that in mind, there's not, at least in my experience, there's not really a major concern around that region. Thus, I would be looking for a general long-term continuation. Now, is the 2-spot extension relevant over here? Yeah, I mean, that's 10,700,000 Satoshis. Yes, but that's very rarely, if ever. In fact, I can't recall really a good example where I've seen a major macro top at that region. Realistically, I'd be looking at the 2-spot 414 and the 2-spot 618. The 2-spot 618 has about a 60 to 70% probability. The 2-spot 414 has more like a 30% probability. Both very much relevant. And remember that BBWP gain that we saw from the past few iterations off of similar low volatility reads. Well, if we were to take the average of that, about 200, where would that net us? Right around the 2-spot 618 actually, which is 18,832,000. Did I do that right? Yes, I did do that right. Sorry, I'm dyslexic, so sometimes I have to double check. Now, of course, when we're talking about these as macro targets, is this happening this week or next week? No, absolutely not. First things first, it has to actually validate the first condition above 7.75 million Satoshis. On a weekly closure, could be 7.5 million Satoshis, however. And then over the next few months, yes, I would be looking towards these general targets. As this whole formation right here is rather interesting. The reason why it's interesting is because you do see a variation of this on most mature assets in this market. So I need to think of an example really quickly off the top of my head. We're just going to go through my list right here. So I want to show you kind of about what we're looking at. Trying to think if anyone on my list actually has this. Maybe AVAX. Yeah, yes. Okay. So when you see something like this with a long form accumulation range, and I'm talking about this area between 21.5 and $9.5 on AVAX, when you start to break above that, you're usually going to get something like this. And I don't think that this one's really done for the long term either. Similar thing on Ethereum, right? Oops, wrong chart. We take everything off. You can see that this is just one major, massive long form accumulation in this range right here, below 5 million Satoshis and above 1.7 million Satoshis. And this went on for about 3 years, almost 3 years, it looks like. So compare that to AVAX, which had about 6 months, still pretty damn good, to be fair, or actually more like 4 or 5 months, still very, very good. But you can see that this is, very likely leading into a macro move. So long term, are these targets relevant? Yes. How long could this take? I mean, this very likely takes months. And again, we have to actually validate the breakout first. So we're still pretty damn far away. But within the context of the question, which one is more likely to outpace the next? Very likely Ethereum by a good margin here. And in another video, in a part 2 video, what we'll do is we'll actually make some correlations between potential Bitcoin prices at those levels and what that correlate to on Ethereum, of course, here as well. Again, I want to reiterate this stance, not that I'm your financial advisor, but it's never wise to go full, all in into one particular coin. It's always good to diversify. But based off this information right here, you can see that a little goes a long way, a little bit more in Ethereum versus Bitcoin. There we go. And I also want to address one point about this that should probably be said, even though I'm not super concerned about it, but the Ethereum Bitcoin pairing does not imply that the US dollar pairing is going to be bullish. The US dollar pairing is obviously neutral to that. It just implies that Ethereum will outpace Bitcoin versus the dollar in this case. Now, with that said, historically speaking, anytime we've seen an uptrend in Ethereum Bitcoin pairing, the US dollar pairings have also been up as well, and vice versa for down. In fact, this is actually a really good sort of tangential chart to be looking at to kind of judge, are we bullish or bearish versus the dollar in basically all of crypto land, because as you know, well, pretty much everything moves together, of course. All right, so I think that does it for today. I want to wish you well, and I think that, we'll leave it off right there. In a future video, we're going to go a few more steps deeper into this. I'll see you in the next one, or I'll see you on my channel. Take care.